that we have seen in Ashok Leyland. So just wanted to know what led to this outperformance compared to the industry, and also with respect to Ashok Leyland.
Maybe I'll give a little bit of overall what I know. Then probably I'll leave the question about giving more details. What it does know from a customer perspective. See, overall, if you look at it, madam, is Ashok Leyland is into LCVs, MHCV in all segments they have. So the overall performance, basically, if you look at it, I'm not sure. I've not looked at the data, but if you look to the all composite, you may be saying it. And second is about this quarter, we had some better benefits coming from sales to aftermarket, which was probably the last quarter's backlog, and we completed this quarter, and also some upsides on the brake side for TML.
Is this aftermarket thing a one-off in this quarter, and or do we plan to see an increase in aftermarket?
That's the backlog of last quarter, which probably we completed this quarter. Yeah.
So out of overall sales on a yearly basis, what percentage of sales is from aftermarket?
Generally, we don't share the percentage, but it's close to double digit.
Okay, sir. The second question was that in March 2022, so we had announced a mission 2025. So in that, 4 key growth levers were discussed. So one was exports. So just wanted to know from the exports perspective, currently how much is exports, and how has that increased compared to FY22 levels?
But FY22?
Yes, sir.
I need to really see what FY22, but FY22, you're talking about 21-22 or 22-23?
21-22.
Okay. I need to really check the data, but I don't have readily. I'm unable to comment on 21-22 to current. But nevertheless, compared to 21-22, definitely our export performance would have definitely gone much better as of now. Because that's definitely it's my gut at this moment of time. But exactly the quantification, I don't have it before me to comment on it. And secondly, on the export segment, again, as I mentioned, that we don't give the segmentation, but you can take it. It is also close to the double digit. That is also, and definitely, as I mentioned, that the marginal increase in exports and good increase the backlog of orders of aftermarket of last quarter definitely has benefited us this quarter.
Sir, exports, 3 years back also we had 2 customers. One, if you see one is Meritor Group, and second was the Volvo Thailand. So apart from this, in the last 3 years, have we added any customers? And if not, then when do you expect to add new customers in the export market?
Ishan, would you be able to take it?
Yeah, sure. So when we talk about export, it is also the intra-company export that we do. So what Ranga touched on, what you mentioned is the OEMs that we export. And regionally, the regional business units will be just end of sale point. That is how it is seen, except for the 2 cases where we do it directly. And going forward also, our focus is the intra-company export, where all the new investment that we are doing to bring the systems to the upgraded versions, and also all the business that we are working with other regions like Europe and North America. That is all intra-company. And your question earlier on the growth, I just pulled out some number, which may not be very accurate, but we have grown about 25% compared to 21-22 to the current year. And all the new products also what we are now working on, we are bringing them to the global standard. For example, 177, 185, these are global products which are already manufactured somewhere else. So now introducing them in India gives us that advantage to also export to our intra-company elsewhere in the world.
Okay, sir. So why aren't we also focusing on... Yes, sir. I wanted to understand why aren't we also focusing on adding new customers in the export market?
Because the products are very unique in those regions. So what we are talking about is only the drive head. But rest of the architecture is very unique for India. Just like, for example, in Europe, it is all cast housing. And in India, we don't have cast housing other than the heavy-duty sub-reduction. So the uniqueness of the end product that goes into the OEM vehicle requires a different way of architecture, which is the regional business units too. So what we can supply from here is only the drive head, which is our primary focus now, and the component.
Understood. So continuing with this question of the mission 2025, the second key target of the mission was that that we'll be entering into LCV and bus segment. So presently, as per also our previous conversation, we are not present in the LCV segment, and bus also just in one product we are mentioned. We are present. So, sir, wanted to understand that this vision was set a few years back, but still we are not very largely present in these segments. So, why has this taken so long to scale up, and how do you see it pan out from here on?
Kishan?
Yeah, I missed that. I heard LCV, but I was not sure whether you were talking about LCV.
Yes, sir. The LCV segment in our mission 2025 that we have stated 3 years back, there one of the key growth drivers was also entry into LCV and bus segment. However, we have not entered into the segment significantly. So just wanted to understand why has it taken so long to scale up this business, and how do you see it pan out from here on?
Right. So when we talk about LCV, we are still talking about the 7.5 ton and above. We have had no intentions to go below that. So all our axles, the smallest axle that we have is also in the 7.5 ton GVW, which we have a good, I would say, share of business with Mahindra and Ashok Leyland. Beyond that, we do not have any plan to go below the 7.5 ton, and neither we had in the past. Now coming to the bus, as I explained earlier, there are clear paths, and our core competency is actually in the 7.5 ton and above. There is no need for us globally also to look below that, which is a totally different ballgame altogether, and we have been never in that space. So for that, those two reasons, our focus will be the 7.5 ton core, where we already have products in production. The volumes are slightly lower compared to the lower end, but then the bus is where we are eyeing for, and also the ICV. So the new brake that we launched, the 394, that is a very sweet spot in the ICV segment, which we were not present in the earlier. So our focus will always be 7.5 ton and above, and to be strengthening our products in the ICV segment, and that is what we have been working in the last 2-3 years.
Sir, my question was yes, sir.
Yeah, just add to what Kishan mentioned. If I understand, your question is why it is taking so much of time. Again, in the last 3 years, when the BS6, when we moved from BS4 to BS6, we had to really upgrade all our current products. That way, we did mention in our previous investor calls, we have probably launched about 4 to 5 new products in the high volume segment, especially for our M and HCV segment, which is really helping us to meet and keep our share of business with all the critical suppliers. So bus axle was a little bit reprioritized, I would say. And that's why, now that we have done with all our major high volume products, the focus is coming on the bus axle. So we didn't slack off. Only thing is, we kind of reprioritized in last 3 years based on the market conditions and the statutory and the legal requirements.
Sir, my question was in the 7. Yes, sir. Just a bit more clarification. So my question was in the 7.5 to 14 ton category only. So previously we were in focusing more on greater than 16-ton category, and then we had mentioned that we will enter in this 7 to 16-ton category also. So my question was that in this category specifically, that we have not significantly scaled up in this segment. So, and you also mentioned something about Mahindra share of business. I just request you to repeat that. I have missed that part. So, why has it taken time in this segment only?
So maybe Kishan, I will just add a couple of comments and then maybe you can further explain. So we do have 3 products in this 7 to 14-ton segment. Like what Kishan mentioned, our smallest axle, which we supply to Ashok Leyland, that has grown in volumes over the last 3 years. Apart from that, we also have 11X product and also the 120 product. So it is not that we don't have the products there, and some of these products have been kind of launched in or upgraded in last 3 to 5 years. So again, that particular volume is a bit a challenging one, and the volumes are also kind of probably Kishan can comment on that. So whatever the possible share of business, we have got the share of business there, and also penetrating into some of the new products which Mahindra has introduced. We are on that, and also some of these products are also being exported by the OEMs out of India. So we do, in a way, indirectly we are exporting some of these products.
Yeah, just to add to that, there is also significant shift in the market. Now, as you see, the higher tonnage vehicles and the high value that our axles provide, that has also been the shift in the market. So we are aligning our strategy along with that. Like all the new products that we are launching is in the heavy duty, medium heavy duty segment, which is where we are seeing the volumes. The 8x2, 10x2, even the 4x2 tractor, where the axle, probably the 185 is the largest axle we have in India, and that is the value we are bringing. And that is also where we can realize more penetration. Like, for example, Ashok Leyland, Mahindra, these are all the non-captive OEMs where we are almost present 100% in these new segments what we are launching.
All right, sir. So my question, I'll continue with the second question, which will be a continuing of this question only. So broadly, if we take the industry MHCV goods carrier numbers for first half FY25, so the average monthly production has fallen in the 25 to 34 ton and 46 to 55 ton vehicles in 1H FY25 if you compare that number to FY24. And where we see the production increasing is the 16 to 25 ton and 25 to 49 ton. So hence my question was in light to this that if the industry is shifting more towards lower tonnage vehicles, then have we been slower in launching products in these segments? And if you could just highlight what is our wallet share in the segments 16 to 25, 25 to 49, where we are seeing higher production currently by the industry.
Your line was not very clear, but I understood you are saying 15 to 18 ton is where the highest volume is sitting as per you from the production data, and then you mentioned some other number, 49 ton is what I heard. And that is probably what I was telling earlier. So the shift is very clearly, and you are probably looking at only the last 1, 2, 3 quarters. But what we are seeing is the high tonnage, the 43 ton and above. That will be the one where the highest number of vehicles will be sold, including the tractor trailers. And coming to the 15 to 18, we already have 3 products in that space, which is in production for a long time. And they are catering to most of the applications that we currently do with any of the OEMs.
So basically wanted to understand if CV market falls, let's say for example 20%, how much fall can we expect for automotive axles? Can we limit the downside to 10% for us as compared to 20% for the industry?
Nagaraj, I'm finding
yeah, That's a very, very tough question. But what we have done over the years, I think you probably can witness that, is when the market is growing at a certain X percentage, we have always grown, more than that. That is by, expanding our, product portfolio, increasing the share of business with our existing customers. And also we are being present in some of the new EV OEMs or startups that are coming in. And our export business in the last 3 years, it has grown. Of course, this year, all the European and North America markets are a little bit, soft. That's why, we are kind of a flat. But that is the area we are kind of looking at. How do we continue to, be competitive with, some of the export opportunities to our own intra-company, so that we can limit this cyclical effect of, the market volumes impact both on our top line and bottom line. And as we have demonstrated, in spite of our top line decrease, we have still be able to hold on to, our EBITDA margins. So we continue to work on that. Our expectation is as we invest more into our manufacturing plant and then launch some of these critical axles like bus axles, we should be able to minimize the impact. I cannot tell you whether it's going to be, less than 10% or more than 10%, but we will try to make it as minimum as possible in spite of, adverse market conditions.
So can we say it in this way that now we have a lot of growth levers like aftermarket that you mentioned, why we have outperformed in this quarter, aftermarket, exports, new products, new segments. So is it a fair understanding that if there is a CV down cycle, then our performance will be much better compared to the historical performance in a down cycle?
We will be definitely try our level best to be better than our peers. But again, it's very difficult to kind of dimension it because there are different product segment and, different OE shares, how it gets affected. But like I said, spreading our, product portfolio and then share of business with all these, opportunities, exports, aftermarket, and also new potential OEs, we will be minimizing it. And I think, we have demonstrated time and again in our last several years, we are always kind of outperformed our peers. So we'll continue to do that.
All right, sir. Thanks and all the best. I'll come back in the queue.
Thank you. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Ankur Shah from Electrum PMS. Please go ahead.
Hello. Thank you for the opportunity, sir. So could you guide us just a ballpark number, what kind of revenue growth you're seeing in the next 3 years, this being a free growth and sustainable EBITDA margins going ahead?
So I know generally we don't paint a picture of the EBITDA, but definitely you see the track. Today, if you really see the highest volume we done in terms of number of vehicles is about 18, 19. Today, if you really look at it, we are much lower than. And the next 12 months forecast, the market is continue to be under 400,000 vehicle level. So we don't expect much of a growth in the next year too. And beyond that, we are expecting the market might grow, but we have to wait and watch. As he said, that as the market grows, our growth will be better than the market for sure. And EBITDA, if the market touches the volume of 18, 19, which unlikely to my opinion, because the configuration of the vehicle, the market segment is completely changed in the sense that the type of vehicle what we have in 18, 19, this is currently happening is quite different. But nevertheless, if there's an overall improvement in terms of the vehicle level, definitely our growth will be better than the market, point number one. Our operating performance, if you look at it, 2018-19 to current, is about we are much in a better position with the new improvements what we have done in the shop floor, and our overall operating performance is much higher. And definitely we can, with the market growth, we can expect as a growth, we will definitely leverage benefit will come very hugely. Our profitability is already growing year on year. But overall, if you look at the next 3 years outlook, Kishan can say that, but overall, more or less, even if it touches 450,000 vehicle level, I think our EBITDA will be at least 20% better than 25% better than what we are doing.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Muskan Rastogi, an individual investor. Please go ahead.
Hello. Thank you for the opportunity, sir. So in the previous con call, you had mentioned that brakes are around 10 to 15% of overall volumes for the company. And the company has launched 2 new models in brakes, as well as they see more opportunity in the exports market. So in the light of this, please tell us, where do you see 10-15% numbers in the next 3 years? And do you plan to increase the brakes mix to 20% plus?
Kishan, would you take it?
Yeah. So the first part of the question was on the growth, what you're talking about. And like you, I think, hello, can you hear me?
Yeah, brake.
Okay.
Yeah. So if you, I think in the previous call we talked about Mission 25 or Mission 28. So similarly, that is when it is for the operation. We also have a product roadmap or technology roadmap for the products. And in the brakes, with the launch of 394, we are already seeing the market which was not available to us earlier. We are seeing that we can easily increase our market share in the brakes by 2 to 3%. So our ambition is to come closer to 35%, 38% as an overall market share in the segment where we play, which is the medium and heavy duty. There are a few more brakes that we are looking at more specifically for EVs. Where today, if you see, EV is still in the bus space, right? It is still growing in the buses. And the brake that we are supplying is a regular brake, foundation brake. But there are opportunities to make modification or improvement in that segment that we are already working globally as well as in India. So with that also in the place for the next 3 to 5 years, when the bus market, electric bus market grows, we believe we can take our overall market share in brakes to about 35%. 35 to 40%.
Oh, okay, sir. Thank you. So, my next question is, in the last 3-4 years, we have been able to grow market share in brakes from 30 to 35% to 40% now. Can you please talk about the challenges we face in terms of getting new business and how do we address them? And what gives us the confidence to take this to 50% in coming years?
Sure. I can probably tell you that, right, the only other competition for us in India is Brakes India. And they are a brakes company. But we are as a full product solution provider. So brakes, while we are only talking about the drum brake, in the drum brake space on the M&HCV side, we have already segmented them to cater to almost all the applications where Brakes India is present. Now, always the challenge, probably for Brakes India as well, is the friction is always controlled by the OEM here, which means our applicating of the product is a little bit limited. It is not, in other words, it is not our standalone recommendation, but it is always jointly with the OEM. And OEMs always have a dual policy. They always have a dual policy when it comes to any product, and specifically brakes, because there are two players here. What differentiation we can bring is our global knowledge. Like I gave an example of the brakes specifically for EV. So we have done a lot of data gathering globally where we understand the EVs operate differently because of the architecture and the regenerative capabilities of the motor. So now we are mapping that back to brakes and making them more optimized, which means that within the operating space, within the MLHCV and the bus space, we can bring up more efficient and more value-adding products, which I wouldn't say Brakes India will not be able to do it, but because we have this global connect, maybe our opportunities there are better. Challenge is always that the highest contributor to the BOM cost is the friction. So that is always in India with the OEM. So that will always be a limiting factor for us.
Oh, okay, sir. So, could you please talk about the business opportunity in differential gears, and currently where are Mahindra and Tata sourcing the gears they are housing from?
Nagaraj, you want to take that?
I think, again, I do not understand what you mean by differential gears. Most of the differential gears, if you are talking about, side gears and the diff pinions, which are all the smaller gears, usually it is always outsourced with the precision forging companies. So I think they should be, getting from the same supplier as I was. But as far as if you are talking about crown wheel and pinion, we always, most of the people, they buy this crown wheel and pinion. They don't buy it. We do at least from the automotive axles perspective. We manufacture it in-house because that's where our IP is. That's where we can we do the value addition. So I believe maybe our competitors are also, most of them, they probably do in-house.
Oh, okay, sir. That was helpful. So in terms of ROCE, what is the delta between ROCE from axle business versus brakes? And what is the capex cost per unit for axle and brake if someone is creating a fresh capacity?
That's the last one is very difficult because it depends on what kind of technology you are going to bring in, and definitely it will be very, very expensive. I would say that because it requires quite a bit of capex, and that's also act as a high entry barrier for the new entrants.
With our technology, from our technology, what would be the capex cost per unit for axle and brake?
Probably, maybe Ranga, you should talk about it because I think we have invested over the 40 years, so it is we don't have one single ballpark number to say what should be the capex. So I think probably that's where I would stop. Like I say, just upgrading and then doing an automation, next 3 to 5 years, that's what we are telling. We are just investing 200 crores just for upgrading our existing lines.
Between axles and brakes, the majority of investment happens in axles for sure, and definitely we are also focusing on in terms of automating the process, debottlenecking some of the areas as far as brakes too. But if you see, majority of investment is on axles only, and see, it's a very complementary product both. We consciously.
How much would it be?
No, we don't give a split, but you can say I tell you about major investments in the whatever the capex which Nagaraj indicated earlier in the call. We have a sustenance, and also we have board has approved 70 plus crores to invest overall basis. Majority, I'll say that would be in the axles business, axles lines, manufacturing lines. That requires more automation and all this. So our focus at this moment of time is on that. Definitely, we have invest in quality improvement systems, productivity improvements in brakes lines also to make sure that we sustain the capacity 100,000 plus to cater down the market improves in the future. So as I said, we don't exactly give. I don't have the split to tell you how much it is. But nevertheless, I'll say that the majority is on axles.
Okay. So in terms of ROCE, what is the delta between from axles and brakes business?
No, that's more internal. Sorry, not able to share. But overall basis, you really see that our ROC is at around 21%. As the volume grows, we can able to overall, the ROC can improve much beyond 24 or 25. So we are just waiting for the volumes. But as I said, the axle has more engineering content. And the value addition is compared to the brakes. Obviously, the margin goes with the same flow. So we see as an overall business together and see that it will be sustained in the market. Both are a very complementing product to the customer. So that's how we look at the business here.
Okay. So one last question. Overall, what is your expectation of the MHCV industry growth or degrowth in FY25 and FY26? And when do you expect the recovery?
Kishan, can I take it?
Yeah. So there are mixed reaction to this. Some people believe this is not a degrowth. This is probably a shift in the overall market dynamics, more closer to the Western world. So the idea here is there is a very clear trend that the engine HPs are moving. The horsepower of the engine vehicle is moving from the lower 200s and the mid 250 range. Now we are seeing 300, 350. And with higher power engines, the goods carrying capacity, the tonnage, is also increasing. So I think the good comparison everybody can do is the 2018 volume of 476,000, which was about 8.6 billion metric ton, is now catered with 390, 380 market, which means the overall tonnage is now stabilized. We know where we are. Now in the next 2 to 3 years, what is expected is with all the growth corridors and the natural economy that is growing, the GDP, along with that, we can expect around 15 to 20% growth in the next 3 to 4 years. And for that, again, what will play a major role is how this high power engines and the segments will have the mix in the overall volume. So that's how we are also thinking. That's how our entire thought process in terms of product launch is also aligned with that.
Okay, sir. Thank you so much and all the best.
Thank you.
Thank you. Ladies and gentlemen, we'll take this as the last question. I now hand the conference over to Mr. Shailesh Raja for closing comments.
Thank you all for attending the session. Maharaja sir, would you like to make any closing comments?
Yeah. Once again, thank you very much for calling into this, investor call. Really appreciate. I do understand that there were some questions we could not probably answer to your satisfaction, especially related to this acquisition announced by BFL. But as we mentioned that with whatever the information we have, we cannot make any speculation or make any premature comments on that. So we'll wait how it turns out because this transaction is not over yet. On the other hand, from the performance perspective, like we mentioned, we are committed. We are always growing, better than the market. And then we have always been very prudent when it comes to operational cost, especially the last quarters, the last few quarters. Earlier we used to invest heavily on the product development. Now we are also started investing and upgrading our operations and then manufacturing capabilities. So with that, we are very sure and very confident the entire management, to meet the growing challenges and demand from the OEs, shift in the product lines, and also maximize the opportunities that is available in both aftermarket and exports. So with that, again, I would like to thank Ranga and Kishan and also BNK, Shailesh. Thank you very much and have a great evening.
Thank you, sir.
Thank you all.
Thank you.
Thank you.
Thank you. On behalf of Batlivala and Karani Securities India Private Limited, that concludes this conference. Thank you for joining us and you may now disconnect your lines. Thank you.